Right, so hopefully this morning session will be interesting for all of you. We do talk about blockchain a lot and the future of finance, but Fusang is a regulated digital securities exchange. So we're really talking about the present moment and how do we connect traditional finance into the digital space. So let's see where we go. So we hear a lot about tokenization, and we heard obviously just now about some of the market forces, certainly in the last 12 months. And we've heard about obviously, at the beginning of this year, we've seen a lot of how the banking system can be kind of like broken in somewhat way with over leveraging, balance sheet exposure and asset liability management not always being that great for certain banks. Obviously, we've seen in 2022 also the kind of crypto meltdown, and it's really spurred regulators into action. And each jurisdiction around the world seems to have a slightly different playbook. And obviously, we've seen in the most extreme case in the US where the SEC is coming down quite hard on any digital asset that looks like a security, and any player that has been operating with in the security space without a regulated national securities license. We've also seen the kind of like the market forces of tokenized security really kind of pushing ahead with big strategic players saying that this really is the future of finance. And obviously, depending on which jurisdiction you're looking at, there is a little bit of a mix and match of stories as to, are we pro-digital assets, or are we kind of like slightly pushing back on this because of regulatory compliance issues that have materialized in different jurisdictions? So we're going to touch on this a little bit, and how Fusang kind of tries to solve some of these problems in the industry, and is looking obviously to become a core pillar of the digital asset industry, more specifically in the tokenized security space. So let's talk about the DNA of Fusang. And really our vision is really that the future of finance in the world is really all about asset tokenization, and connecting investors with products and liquidity to these, quite often private securities or private deals. Our mission is really to build this blockchain-based network of regulated institutions on a global basis, powered by our own blockchain, and really make it borderless as such. And this is one of the things where, as we've seen the market structure for cryptocurrency mature, the most interesting aspect of cryptocurrencies has always been this borderless aspect of transferring value. However, we've also seen the problems with like AML and KYC issues, and clearly banks don't often want to front the risk. But we think we have an interesting solution, certainly for the participants on this webinar, and we'll share a bit more with you about how we're looking to solve that problem, and obviously remove some of the concerns about AML, KYC risk with the shift in our own exchange. Now, Fusang did start off as a, our founder, Henry, was on a journey to build a digital securities exchange. We built basically what we called Fusang 1.0, a B2C global digital exchange. But what we realized is some of the problems which you see in the digital space is like KYC, AML checking, direct user participation in these exchanges, and some of the challenges of, are these exchanges brokerage firms or exchanges? So we recognize that type of problem set, and we are looking to kind of build out what we call Fusang 2.0, which is really the meeting of minds between my experience and Henry's experience, to build a global network of institutions underpinned by our exchange infrastructure and our blockchain network. And I'll go into a bit more detail about how we're going to do that, and how the participants on this call can kind of join the network and actually transact in the digital space. Now, my background is actually with a firm called LiquidNet. So I was responsible for globalizing the world's most successful institutional dark pool around the world. And similar to the blockchain digital asset space, I was running a pioneering business where regulators struggled to understand the difference between one dark pool to the next. Back when it was like a buy-side only, a global institutional network. And I recognize the similarities in the blockchain space that we're in right now. So part of our mission is really to help regulators understand that not all exchanges are the same. And certainly the Fusang franchise has a lot of the core infrastructure that you would expect to see in a more traditional finance stock exchange, but we're much more digital than, say, your national stock exchanges that you see around the world. I am also a ex-regulator with the Securities and Futures Commission in Hong Kong. This is how I kind of accidentally fell into the blockchain space. The Bitcoin world and the cryptocurrency markets caught my attention with the interesting innovations that you see in how capital markets could be connected using blockchain and the transfer of value on a global scale with massive liquidity. But we've also seen how, since 2017, which is when I kind of became really interested in this space, how cryptocurrency regulation hasn't really caught up with where securities regulation is today, securities and banking regulation is today, and it's still evolving, right? So we kind of have a strategy and focus for Fusang to say, let's focus more on securities and traditional finance and meeting the regulatory compliance and governance standards of existing regulations around the world, because securities and banking regulation is far more mature than crypto regulation. So one of our friendly faces in the industry is Larry Fink from BlackRock. And obviously recently he's come out and said a few interesting things about the future of tokenized assets and where he sees, the market view for fintech and traditional capital markets is going. I think we have a nice little video we can play.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
So obviously, Larry, pretty intelligent guy, represents one of the largest buy-side institutions around the world, thinks tokenized securities is the future. And that's kind of exactly the swim lane that Fusang's exchange is sitting in right now. So, if you think about the promise of tokenization, there's always been the promise of liquidity, but historically it's been a slightly broken promise because of the issues with regards to cross-border settlement and interaction of, marketplaces and investors from around the world. Now, the blockchain that Fusang is putting together, which is built purely for regulated FIs only, is looking to solve some of these kind of issues. And certainly we're looking for market participants in this jurisdiction and others to join that network. And I think this would be really interesting for both business heads and the compliance heads of banks and securities firms to explore this channel further with us, because I think this is where the real revenue opportunity starts to materialize for existing financial institutions. We've obviously looked at the fractional element of tokenization and just effectively taking large deals that historically wouldn't be broached to the wider audience of investors, just because there's purely too much distribution cost, and the packaging of those deals is pretty hard when it's all paper-based historically for private equity deals or large private funds, right? Certainly the promise of tokenized securities and investor access has been challenging in the security space purely because the B2C model is acquire one customer at a time and limited certainly by different jurisdictional boundaries based on where your securities license is granted. So we kind of see in our planet, in our world, we're looking to really just build out a much greater global investment network built around our exchange, which looks more and more like a traditional national stock exchange. Certainly the promise of efficient settlement has been interesting for banks and how they would support the digital asset world. And certainly in the tokenized space, the promise of efficient settlement is underpinned by pre-funded accounts. In the security space, clearly that's not been normal historically with T+2 or T+3 settlement cycles. Everyone is used to some form of credit model before post-trade settlement happens. So obviously we even at Fusang are experiencing like a mixture of, it's like, do we settle at trade time or do we have delayed settlement? And we are obviously looking for various bank partners to play that role of the credit agents in the network. And we can give obviously banking partners different ways of accessing liquidity inside our network and providing services to our community. So this is something that could be interesting to explore with various bank and business heads. Underpinned by all this, certainly from a tokenized security space, is really the standardization of the governance and the regulatory frameworks that should underpin investing into any investment class. And at Fusang, we have our own standardized share repository or depository where we are looking to obviously build out a CSD that kind of fits the tokenized security space. So if you want to learn a bit more about what we're doing there, please come and speak with us after this event. But let's go back to the big macro picture. So, we believe that the time is now for asset tokenization. You've seen in terms of some of the tailwinds in the market and the regulatory treatment of, say, staking venues, where a lot of the staking venues where they produce yields for investors. I think regulators have, certainly in the US, have come out strong and said, look, if it's yield generating, if it looks like an investment, we're going to treat this as a security. And a lot of the marketplaces that have been operating without a full-blown securities license, they seem to be getting themselves into hot water in this space. I think some of the trying to be too smart about, hey, this is a yield or an APY problem that you see in the crypto space. That's clearly demonstrated to the regulators that they kind of want to get their hands around this. And ultimately, if it's trading some form of yield and returning some form of cash flow and it's invested in on that basis, even in my opinion, I would say most of these look like securities and they should obviously comply with traditional securities regulation. Obviously, we've seen tokens where they don't have any bankruptcy protection and you actually don't know what the underlying assets are. Something that's going to be interesting for certainly all of the participants on this call is if you do come and use our depository infrastructure, you'll find that it's like all the bankruptcy protections and your legal rights are very clear and transparent, and they should stand up in traditional common law courts. So we've seen the interest in the institutions and tokenized assets, as mentioned by Larry. There are obviously other institutional players that are in this space running various experiments, some of which we'll talk through in a moment. But we are in the first innings of tokenized securities. And certainly the early investors in this space who think that they will reap the benefits of this digital revolution. I think back to my own experimentation. I've been, I guess, for digital securities experimenting since 2018. So I think we're getting past that first base of experimentation, and it's really into can we commercialize this and turn these into real business opportunities for banks and brokers around the world. And that's where it's going to be really exciting to see certainly what happens in the next phase of evolution. So as I mentioned, there is this institutional momentum that's been building and building and building. It's predicted that the total tokenized assets can hit up to 4.1 trillion by 2030. So, that just in terms of issuance terms, that's already 4 times bigger than the total market cap of cryptocurrencies. And this is not obviously extrapolating any potential for secondary liquidity, which at the initial point right now is actually very slow due to various limitations and constraints of banks, brokers, and cross-border capabilities not being existent yet. But we've seen a really interesting mix of experiments from really big brand firms out there, a mixture of banks and even governments involved in certainly the tokenized bond space. So it's clearly, I think we're past kind of the first innings with regards to experiment number 1. The real next jump is really, can we take these types of experiments, plug them into some form of stock exchange, create liquidity at scale? So how do we solve the cross-border issues and the concerns about KYC and AML risk? And certainly Fusang is not the only player in this space, but we have our version of how we are going to approach solving this problem. Obviously we've got a reverse slide presentation. How do I get this to appear in the right sequence? Okay. So, let's talk about the role of banks in the digital space, and I think there's certainly been the traditional pioneers trying to disrupt a market structure, and there's been the standard resistance from incumbents. I've experienced this throughout the whole of my career, certainly with trying to build a dark pool around the world, where I was like, are we partners or are we competition? And with the regulators, is this good for the market structure or is this bad? I see there's actually not much difference in the digital asset space. So right now, the role of banks is and what they could play in the space is slightly unknown. They've got their existing ways of generating revenue for, I guess, with a closer focus on a quarterly P&L basis rather than long-term experiments, and they're still trying to find their way. But we do see, in one space, issuance, so I guess investment banks trying to bring deals to market. Your traditional routes for capital raising would be primary listings on a national stock exchange, or do the whole deal in private, but it's obviously not super scalable, and both types of deals involve large investor roadshows, and it can be painful just to do all the administration process to get your deal to the point where you can run the raise. So certainly in Fusang's technology and legal and regulatory stack, we're aiming to help bring, I guess, investment product issuance to market in a much more streamlined approach, a much more low-cost manner, and it's much more standardized. For the sponsored partners, where they're like, hey, where should I run my listing? Well, we're clearly quite different to the other national stock exchange. The risk for the sponsors and their deals not getting, I guess, regulatory approval is a lot lower when we can run a lot of the fractionalized, I guess, issuances to private. And then obviously, if we do want to go public, we do have a strong bit of know-how with regards to how we can IPO equity debt on Fusang in our jurisdiction. With regards to distribution, this has always been one of the interesting problems. So I guess for banks and brokers, where they've got the tail end of their deals, it's always been a bit of a slog for institutions to say, well, I've got the, where do I put the residuals for my trades? And we do see that actually tokenized securities could be an interesting way to solve some of these problems of deals where large institutions don't have time to broker the final balances of their trades, and it would be very simple and low cost for them to plug those assets into our exchange and then hit the rest of our global distribution network. We do see a role clearly for different types of credit from banks and how they can obviously monetize within our network. by providing these services. So we are looking for bank partners to say, what are the relationships that we can bring to you, so that we can create mutual revenue opportunities. And then the obvious thing for banks would be really the role of the custodian. Certainly at Fusang, we really don't see the role of centralized intermediary exchanges being the primary custody layer that underpins everything. We may be the aggregator of custodians, but certainly I think for the safeguarding of client assets, we would prefer that banks play the role of the custodians. So we are excitedly exploring this space in both the digital securities space and also the crypto space. And if you want to learn more about our custody model, then please come and speak to us after this call. It will be slightly different to what you see from most of the centralized intermediaries out there. So how does Fusang's digital exchange operate? Well, on one side, we have effectively a pool of issuers and investments. So really, these are the products that investors can access in tokenized form on our platform. So they range from companies, startups, fund managers. It could be various assets. It could be debt. And we're really looking to kind of like bring those assets into our platform. They could be private funds, private equity, ventures. And it's really about offering the market participants in our network differentiated access to different types of boutique investment strategies and products so that they can customize portfolios for their clients. So we have this network type member one, which is basically join our network, become a participant on the blockchain. All of the partners on the blockchain, they are regulated financial intermediaries, and they will be responsible for KYCing and AML checking their own clients. So we kind of only let institutions that are already regulated by a leading securities or bank regulator into the network, so that we know that everyone transacting within this ecosystem can meet at least the international standards for AML, KYC checking. And we don't have the risks of basically B2C. We don't have the risks of B2C kind of issues that you see with some of the centralized exchanges. We have on a type 2 trading agent for Fusang is really, it's like join our network and become a trading participant on the network. And that's really, how do you exchange assets within our network? So most of these type 2 trading agents will be broker dealers and banks, right? So it's like effectively regulated securities or bank institutions with existing clients that have already passed KYC. And the third type that we have is listing sponsors. So if we have effectively partners that want to bring and effectively sponsor deals on our platform and have them listed on the exchange, we have these three types of memberships. But I would say our current focus is really building out the blockchain network, which underpins a safe network for everyone to transact in of regulated FIs, and building the pool of trading agents on the exchange, where we've got effectively more and more global liquidity coming together to transact. Right. So effectively, as I mentioned, we've got the liquidity effect of fractionalized investments that we're going to bring through our tokenized securities. That network effect will, with regards to, as we get more and more brokers onto the exchange, it's going to be quite exciting to see how these tokenized securities can access a greater and greater investor pool from around the world. And it'd be much more likened to when you effectively list on a national stock exchange. But I guess the difference with Fusang is a lot of the brokers could come from different parts of the world. And it's a interesting aspect of this exchange. Certainly the access to alternative investments via our standardized security token infrastructure will bring a greater product set for brokers, which normally, I guess at this stage, slightly limited to more traditional public securities. and it's all done through our regulated digital securities exchange. The clearing and custody layer, as I mentioned, is going to be something which I think will underpin how our exchange is uniquely different to some of the other digital asset players, as we'll be having other third-party custodians as partners for our custodian there, which will really separate, I guess, the risks with regards to exchange running the marketplace versus custodian playing the role of custodian. And I think most interesting for guys who've got private securities that they're transacting in, whether they are debt or equity deals or even a combination, then our depository framework will be interesting for these types of deals. And we can even take secondary listings from other national stock exchange and host them on our exchange, which may be an interesting way to open up liquidity access for market participants. So let's think about the kind of like issuer benefits, right? So why tokenize your deal today? Well, it is completely paperless. We have a digital share registry, which will be running on the blockchain. The onboarding process for investors, certainly on our side, is much simplified in a B2B model, where effectively banks and brokers are our exchange partners, and they already have their compliant KYC and AML processes in place. So you're not quite relying on the same digital vendors that you see in the B2C world. Though if there are banks, brokers, and partners out there that are looking for this type of exchange technology, where they want, or effectively broker technology, where they're facing their clients and they want digital KYC, we can provide technology services to partners that don't have mobile app technology and these types of interfaces. We are looking to help issuers save time and money with endless roadshows. But having a more digital nature and a global distribution will really be able to effectively market their deals through the platform much faster. The issue, we do see that the issuer is the best advocate for their own product, as opposed to having some intermediary broker on the platform. And I think this is going to be quite interesting with regards to connecting issuers with like global access to liquidity. On the liquidity front, clearly we have a secondary trading venue, but I think the first milestone is really get these securities into tokenized form. Certainly for investors investing in these primaries, the promise of secondary liquidity when there's a low or no frictional cost to securitize and wrap these as tokenized securities on our exchange is going to be interesting for them. Historically, when you do primary paper deals, it's very hard to get out of the transaction because it needs to be structured again on the way out, and someone needs to manage the distribution. But in tokenized form on our exchange at low to no cost, I think this is going to provide an interesting liquidity option for certainly private securities investments. The other thing which I guess secondary liquidity has the promise of is really just reduction in, say, the redemption kind of like of, say, private funds and investments, reduce costs to, I guess, swap your LP investors from existing deals to have new investors coming in. That's an area which we are looking at quite strongly for private funds. And certainly the promise of different capital pools of investors coming in and buying and selling your deals is going to be interesting. And at speed, we are looking to obviously validate demand, and our kind of like low-cost tokenization model helps certainly you validate as an issuer the investor demand without too much risk, and certainly not too much financial cost. So if you want to learn more about our issuer process, certainly we have a very simple onboarding process for your fund or your asset. We need fact sheets and PPMs so that we can obviously explain to the investors what is your investment. On a private basis is actually very simplified compared to an IPO. And ultimately you then set your fundraising target, of which you may wonder, it's like, what do we charge? All of our commissions are kind of fully aligned with how urgent and how much priority the issuer wants to put with regards to paying distribution partners. For brokers that coming onto the network, that they would be able to participate directly in the distribution fees with a revenue sharing kind of model set up. And then effectively the issuer can then just start raising capital through our network. So it's a pretty quick and simple way to get products live and have access to a global distribution network. So why might brokers want to join the Fusang Exchange? It's really about opening up product breadth for the brokers, access to alternatives and private markets. It's ensuring that certainly deals are ready to transact with regards to private deals being structured already, and access to well, I should say secondary markets. Secondary liquidity and access via our global exchange is really what brokers I think will be most interested in, especially if they're doing a lot of primary deals. Again, if they have it structured in our tokenized form, then obviously the ability to sell the fact that there's going to be secondary liquidity behind primary deals is interesting for investors, so they know that when they're entering a deal, there is a potential exit. You want to obviously trade through our exchange where there's like a compliance and framework, a governance framework, which is built like a traditional finance regulated securities exchange. And certainly the AML, KYB, and KYC problem, we've certainly solved for that by ensuring that only a network of regulated FIs is transacting, and these regulated FIs obviously have got their own local regulator where they have to comply with securities or bank regulation. So this is kind of meeting the global standard of regulation. Our mission really is to provide access to these investments and ensure that the investors have got proper investor protection, and the tokenized framework that we provide for the issuance side of our platform should help the investors coming in via these brokers have better understanding of their legal rights and protections with regards to these investments. So broker onboarding, what do we need to do? It's a very high touch, friendly process. Obviously, get in touch with myself or Henry or our business team. We will appoint a relationship manager to help onboard the broker. Standard, B2B kind of like onboarding of your brokerage or bank firm into the network would be how we'd operate. We'd open accounts for you, and then the really it's like how do we basically send transactions to one another would be via some form of API fix message or even web portal. We can operate with omnibus or client account sub account structures that you would see in more traditional finance, and then we would enable the trading to go live. So if you are wondering how you can utilize tokenized securities within your organization, we'd love to connect with you and speak to you on these matters. Come and look me up on LinkedIn. And also, actually, you could potentially have a look at our website and join our network, which I will bring this up actually now. So if you go to fusang.co/fusang-network, you can learn a little bit more about how to join our network. And if you click on the connect to the network, you can kind of populate a small form, and we can get in touch with you and explain how we operate. And there's a bit more information with regards to what are the roles of the participants on the network and how we operate this regulated network for global financial institutions. I think that is it.